To Walser Wealth Management CEO Rebecca Walser, Money Map Press's Michael Robinson, and Deep Digital Chairman Dave Maney on how investors are weighing all this uncertainty. Rebecca, first to you. There doesn't seem to be panic. I mean, you see today we came well off our highs, but it's still positive, both in the NASDAQ and in the Dow. We're only 4.5% off of the ultimate high. So are you kind of surprised at the resilience of the market?
Yeah, I mean, I think, David, with the consumer confidence coming out even better in May than we even had from April, people are still, seeing the fundamentals there are strong, and I think they are playing a long game, too, and they're going to exercise some patience here, which is what we need. We need some patience because, obviously, Trump's comments while he was over in Japan could have been, obviously, we could have had a huge negative reaction that we're not ready to make a deal with China. And so, yeah, we do have some patience going on, and that's what we need right now. We need it.
Well, and particularly, Michael, it's not just China anymore. It's Europe. There's a lot of uncertainty there as well. But I'm wondering how all of these things, China, Europe, et cetera, might affect the bottom line of corporations.
I think that's already being priced into the market. That's why you're seeing the resiliency there. To put the trade dispute in China in perspective, the United States economy is around roughly a $19 trillion economy. So $200 to $250 billion worth of Chinese goods is really just a blip on the radar screen there. We do have some slowdown in growth in Europe, of course, obviously, as we've been talking about. And it looks like growth is slowing a little bit. Probably the second quarter will come in with GDP around 2% or a little less than that, down from, the current 3.6%. But I'm sorry, 3.2%. Having said all that, I think everything is priced in. The resiliency is there because overall the economy is doing pretty well. This is the best jobs market we've had since the Beatles were making records back in 1969.
Oh, I love that reference. Love that reference. I can identify a little bit with that. Dave Maney, let me just drill down a little bit on China because we keep hearing there have been some terrific articles over the weekend in Washington Post, Wall Street Journal about China and 5G and suggesting that they're far ahead of us. I know they have 10 times the number of 5G cell positions than we do in the United States. But I'm just wondering if that is a little overblown. We are the United States. They did steal a lot of our technology in order to get to the point where they are today. Is the concern about China's dominance in 5G a little overblown?
I would say so, and David, in part because it's viewed, I think, pretty much everywhere in the Western world as quite a security risk. I mean, there's no mystery about that, and I don't think there's much question that there's some level of monitoring or eavesdropping or information kind of parceling out. And just the doubt, right, and the complexity of trying to unwind it makes it, where do you want to go if you're rolling out that technology across your broad network? And you're spending billions of dollars to do so, and your choices are, relatively kind of very well-known American suppliers with a long history of playing fair, or guys who might be doing something that does the bidding of the Chinese government. So you can take all of the factors, and trust is still the ultimate glue that underlies business relationships.
And Rebecca, this is if there's ever been a moment to take on China, to stop them from doing what they've been doing for decades, in terms of stealing our products, forcing companies to take Communist Party members as part of their boards overseas as they work in China. I mean, all that stuff comes at a price, but we are in a good position to absorb that price, are we not?
Yeah, Dave, this is there's not been a president before that's had the fortitude to do it. Trump does, but this is the economy to do it. And if we can't do it now, when we have the best unemployment, as Michael said, we have the fastest wage growth in a decade, we have the just record across the board, and like you said, we are off the highs, only 4.5% on this market. If we can't do it now, we'll never do it. And if we don't do it, China is going to own the world economically for the rest of all time. It has to be done now.
And Michael, you say that the market has absorbed already a lot of the doubts about China and what's happening in Europe, et cetera. I'm just wondering if we do have some kind of a deal. And again, it's that we've heard this analogy before, the football analogy, the last 5 yards are the hardest. That's where we are. If we get past those 5 yards and end in a touchdown with China, what happens to the market then?
Rally.
How big?
That's hard to say. It's going to depend on the details of the deal, and the president's being kind of cagey about exactly how that's going to shake out. So it's hard for me to really predict what kind of rally we're talking about. I'd say we'd make up all of the ground and then some. I mean, we're in a generational bull market. It's largely being driven by all this tech advances that you're seeing around us every day. As we've been talking about, consumer confidence is at a high. The economy is overall pretty strong. So I think we could see a meaningful rally out of this. Whether that means it's going to go 15 or 20% from here is hard to predict, but at least make back what we've given up lately and a little bit more, I would think.
And Dave, what about concerns that some people in Silicon Valley have expressed that, we need to have some exchange of ideas? We know that China's been stealing our stuff. At the same time, the world is a laboratory for high tech, and we do need to exchange ideas, have an exchange in order to develop. Is that possible? Is it possible to restrain China from stealing while at the same time creating that worldwide laboratory?
No.
You gotta choose then.
I don't think you could just stop it, right? Like I think it is. I think that they're very, very different business cultures, and I think that one characteristic across everything we've been talking about today is that this economy, this technologically changed economy, is creating winners and losers. It's rising or raising overall wealth, but it doesn't mean that within the landscape there aren't real winners and losers, and that leads to political changes and revolutions, and it leads to uncertainty, and that will remain a kind of drag on the market.
And Dave, just sticking with you for a while on this, again, the concern about China leapfrogging ahead of us in 5G, which you think is a little overblown, and I tend to agree with you. At the same time, how long will it take us to catch up with China and maybe to develop an 5G infrastructure that's even stronger than the one they have?
Oh, look, I mean, I don't think there's a specific answer to that other than to say that when you have a build out like that is hugely technologically driven, but overwhelmingly investment and capital intensivity driven, there is no system on the planet better than capitalism for capital allocation. So the idea that somebody can, in a centrally planned way, muscle the rollout and adoption of new technology better than the capitalist system can, it can't. So I don't stay up at night worrying a lot about it.
Amen. We all say amen to that, right? Amen, brothers and sisters. Rebecca, Michael, Dave, great to see you all. Thank you very much.